Plenty more to discuss too with Martin Lakos from Macquarie Private Wealth. I spoke to him shortly after the close. Martin Lakos, a mixed performance as the market went nowhere at all. Is that a refocus on Europe after the summer holidays casting a shadow?
Well, actually, we had better news out of Europe. It looks like Angela Merkel and her party are actually possibly going to agree to some concessions for the Greek austerity packages. So, in fact, European markets rallied, as did American markets in the early stages. In fact, the S&P 500 rallied to its four-year high at 1,426 index points for that S&P 500, but just couldn't hold it. Saw some profit taking, and the Dow Jones closed down about 65 points, as did the S&P. So the lead really was pretty average for our market. But let's face it, Tiki, we're very much focusing in on this reporting season.
Well, let's go to the season because it's hitting high gear today. AGL Energy has disappointed investors. Now, was it as bad as suggested by that bottom line fall in profit of, I think it was 79%?
Yeah, look, you've got to add back the costs that came in on their Loy Yang acquisition. So adding it back, it looks like that the profit line is pretty much in line with the expectations. There's absolutely no doubt there are some pressures emerging for AGL and its businesses, particularly in retail pricing. And there's also no doubt that regulatory issues are starting to pick up with the methodology on regulatory returns being looked at. And next year, we're probably going to see those regulatory returns quantified as well. So a little bit of pressure there for AGL, I'm afraid.
Now, Asciano's 19% lift in full-year earnings didn't seem to meet with much market enthusiasm.
Well, Asciano's done a very good job in really managing expectations. So the numbers were actually very much in line. The positive surprise was their bulk ports, which did much better than anticipated. Coal volume is pretty much flat and in line with expectations. So not a bad result in that respect. The disappointing thing was they didn't give us really guidance for next year, but they have said they should achieve 15 to 20% growth over the next 3 years without really being any more specific than that. The stock was basically flat on the day at 451.
And investors seem to be much more impressed with online job advertiser Seek there.
Look, there had been an expectation that things would start slowing in the jobs market, but in fact that doesn't seem to be the case. The second half result saw some continued momentum, which the market liked. They gave good guidance and margins started to continue to improve. Margins running at about 61%, Tiki, so a great business to be in. Stock up 43 cents to $7.13, so very much a positive result from Seek.
Of course, Seek's gain is Fairfax's loss, and I think they're reporting tomorrow. Fairfax, Martin Lakos, thank you very much for joining us.
Thanks, Tiki. Big day tomorrow. Over 30 companies reporting. Thank you.